if you look at the position overall, I think the establishment is short of silver across both markets. How much is very, very difficult to say. But what we're seeing in effect with people standing for delivery is they're converting synthetic silver into real silver. I think it's true to say that in the case of gold, the short positions on COMEX are actually covered by long positions in London. And they're probably net long. I mean, basically, they have prepared the ground so that they can put the yuan on a gold standard at any moment. Just tell us when and we'll do it. It's a bit like that. Now, having said that, China does not want to be blamed for breaking the fiat currency system. So it's got to be very careful when it actually does it. But you can see from recent moves that the leadership in China now think that that day is not terribly far away.
Alasdair Macleod warns that stress is building in global precious metals markets as investors increasingly demand physical silver delivery instead of paper contracts. This shift exposes potential large short positions held by financial institutions across futures exchanges. When traders convert synthetic silver into real bullion, supply pressure intensifies and price volatility can surge. In gold, Macleod suggests major players may already be strategically positioned, possibly preparing for a future monetary reset linked to Eastern reserves. China's long-term strategy could involve a gold-backed yuan, but timing is critical to avoid triggering blame for a fiat currency crisis. Precious metals may play a central role in the next financial transition. Now, we present the clips from Alasdair Macleod's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The demand, if you like, when you can see that you've got geopolitical things actually happening, and you've got your own central bank rushing out and buying gold, selling dollars to buy gold, selling US treasuries to buy gold. You know, as the ordinary person, let's say, in some regional town in China, what do? Do you go for gold? No, you go for silver. Of course you do. And this is why demand for silver has just gone off the charts. And at the same time, industrial demand is the highest it has ever been. I mean, when you look at photovoltaics and also electric vehicle demand for silver is just absolutely amazing. And India in particular is an economy which is now growing very, very rapidly. It's roughly where China was, say, 20, 30 years ago. And its demand for silver, industrial demand, is again off the charts. So there is no silver around. And, people are buying silver. Industrial users are buying silver, say on COMEX or in London, and effectively standing for delivery. But where does it come from? They haven't got any. If you look at what's in the London vaults, it's almost, not entirely, but it's very substantially ETF silver, which you can raid if you're an authorized participant. But if you raid it today, you've got to pay it back tomorrow. There's an awful lot of the silver which is held in London vaults, which is hoarded, if you like, and therefore not really available on the market. There is just no liquidity in the market. And if you look at the level of open interest in silver, it's low. It's low in gold as well. In fact, it's been collapsing in gold. I mean, we've got 465,000 odd contracts is the open interest in the gold and the COMEX gold contract, which is low. I mean, the idea that this is being driven by speculative interest is completely wrong. There is no speculative or very limited speculative interest certainly in COMEX, and I guess also in London. No, it's being driven by monetary factors, in effect, and in the case of silver and also platinum group metals, with industrial undertones. If you look at the position overall, I think the establishment is short of silver across both markets. How much is very, very difficult to say. But what we're seeing in effect with people standing for delivery is they're converting synthetic silver into real silver. And that is the problem the establishment has. And there is an additional problem, and that is that because there is so little speculative interest in silver, you can't really shake the trees and get some stock back, if you like, or close off some of your paper liability. And that, I think, is the nub of the problem. But the whole thing is being led by the nose upwards by Asian demand. particularly in Shanghai, but also, dealers in places like Singapore are finding they're still queuing around the block to take delivery of physical silver coin and small bars.
Physical silver demand is surging as monetary uncertainty and industrial growth collide. Analysts like Alasdair Macleod highlight how investors are shifting from paper contracts to real bullion, exposing tight supply across London and COMEX markets. With central banks buying gold, retail buyers in Asia are turning to silver as affordable hard money. Meanwhile, record industrial use in solar panels and electric vehicles, plus rising Indian consumption, is draining inventories. Low speculative interest means fewer sellers, increasing the risk of a supply squeeze that could drive major silver price volatility worldwide. Let's get back to the interview.
What we're seeing is the end of the fiat dollar-based currency system. And what that means is that unless someone actually steps in and recognizes this and does something about it, the purchasing power of the dollar is going to zero. And on recent indications, that's going to happen really more quickly than perhaps we originally thought. So on that basis, you've got to understand that if you're looking at buying gold or silver, it's not them going up so much, though obviously with the volatility, silver is actually recovering quite quickly, as is copper, incidentally. But it's more a question of the dollar going down. So when it comes to hoarding, if you like, taking a position, getting out of credit, you have to ask yourself not the question, is gold going down? No, you have to ask yourself, will the currency stop going down? That's the question you need to ask yourself. And I'm sure that, there will be, nothing happens in a straight, smooth line, but basically the loss of purchasing power of the dollar measured by gold, which remember is real legal money, despite what the Treasury has been telling us over the last 55 years, measured in real legal money, the decline in the dollar is accelerating, and it's accelerating really quite alarming. I mean, basically, they have prepared the ground so that they can put the yuan on a gold standard at any moment. Just tell us when and we'll do it. It's a bit like that. Now, having said that, China does not want to be blamed for breaking the fiat currency system. So it's got to be very careful when it actually does it. But you can see from recent moves that the leadership in China now think that that day is not terribly far away. What they're doing is they've opened vaults in Hong Kong. This is Shanghai Gold Exchange vaults in Hong Kong and also in Saudi Arabia. Furthermore, this last week, they have announced a further tie-up between the markets in Shanghai and in Hong Kong, so that they will work as a combined unit, with Hong Kong effectively being the depository for gold, which will be deposited there by countries. Let's say, sort of on a swap between the yuan and gold. And this is specifically for trade settlement. So in that sense, what we're looking at, if you like, is a Chinese version of the Bretton Woods agreement. They're really working on that basis. I don't actually see them at this stage extending, if you like, gold backing for domestic yuan. What I sort of suggested in a recent article is that because they have got an exchange control regime, effectively splitting off the domestic market from the international market, they could actually go back onto a silver stand for the domestic yuan and effectively peg the rate between silver and gold. So we could be going back to the days when you've got, let's say, a sort of 15-to-1 gold-silver ratio, but it would be run very, very tightly by China. It could get away with it because it has ring-fenced its domestic market through exchange control. So I think that's an interesting thought.
Analysts warn the global monetary system may be shifting as confidence in the U.S. dollar weakens and demand for hard assets accelerates. Commentators such as Alasdair Macleod argue gold and silver are acting as monetary barometers, reflecting currency debasement rather than simple commodity moves. China is expanding gold infrastructure in Hong Kong and strengthening links with Shanghai markets, signaling preparation for gold-linked trade settlement. Some even speculate about a future silver role in domestic policy. Rising bullion demand suggests investors increasingly seek protection from inflation, currency risk, and long-term financial instability. Share your thoughts on his analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.